Welcome back, ladies and gentlemen, to another interesting video. It has been long since I posted last. It is nice seeing you back again. If you've not subscribed to the YouTube channel, consider subscribing because hot content has been lined up your way, and at least you'll be enjoying because they'll be opening your eyes to see the market with a greater dimension. Now, also this is a thank you for attaining 1,000 subscribers, and at least I'm proud of the rate of the growth of our YouTube channel, the consistency in it. So I've been off from posting, but now I'm back again. At least I'll be making more videos. So consider subscribing, consider sharing, consider liking, consider commenting if you have anything to say, and at least let us grow as a community. In today's video, it will be all about entry pattern, and I'll begin with entry pattern 1. I'll do a couple of videos explaining the different entry patterns so that you can be able to understand the different entry patterns. So in today's video, it will be entry pattern number 1, and I'll talk about both the sell model, and I'll flip or I'll invert the scale so that you can be able to see the model for the buy side of it. Now, these entry patterns, they must be based on the lower time frame because the lower time frame are the ones that we use whenever we are stroking our entries from. So the pattern must unfold in the higher time frame point of interest in the matrix. We always choose 3 time frame whenever we're doing analysis. We have the highest time frame, we have the mid time frame, and we have the lowest time frame. So your highest time frame or the mid time frame is to locate the point of interest whereby potential reversal could take place. Like for example, this orange part, maybe let us assume that it is our higher time frame point of interest. It can be in the form of the fair value gap, the order block, the mitigation block, the sell side imbalance, price side inefficiency. It can be in the form of the vacuum blocks, right? So it constitutes our point of interest, the high time frame point of interest. It is not a must for it to be the order block. It can be the order block, the fair value gap, the mitigation block, and the likes. But the pattern should unfold in the lowest time frame in the matrix because you always choose the 3 time frame whenever you're doing your analysis: the highest time frame, the mid time frame, then your entry time frame. So your entry time frame, you should see this entry pattern 1. We have more than 4 patterns, of which I'll talk about in different videos. So this is the basic one, and at least it should be a guiding block to the rest. Now, your entry pattern should be seen in the lowest time frame in the matrix, right? So this should happen. Now, initially, let us assume the market was trending to the upside, then it took out the liquidity, diving into our higher time frame point of interest, right? We don't sell. The essence of these entry patterns helps you to be a conservative trader. So you wait for the market to show you a shift in structure or a break in structure in the lowest time frame, your entry time frame. Whenever this one happens, now you should be eyeing the potential supply levels whereby the market could potentially reverse from. So the market took out the liquidity, broke structure. This is the strong high. What is formed as a result of the strong high? Weak low. And there is a video I did about the strong high, weak low, of which I guess you're well acquainted to it. You know it better now. So this is our strong high, weak low. But at least the pattern should unfold in our higher time frame point of interest whenever you dive into the lower time frame. So whenever this break of structure has happened, look for potential zones of liquidity whereby the market could tag before reversing. Because I always tell people, whenever you're thinking of being a seller, right, take note of the earliest sellers who are bound to be taken out first, even before thinking about the breakout traders who are anticipating to be tagged in the buy side of it. For me, what I usually do whenever I want to be a seller, I always look for the potential early sellers because in real sense, they will be acting as liquidity. Then of course we also have the breakout traders, the buy stops residing above this particular place. So I always look at a zone of liquidity where the market could potentially take out before reversing. And whenever I look at a potential zone of liquidity where the market could take out, the most recent zone above it potentially will react at as my selling point, right? So basically this one, you look at the supply level in the pattern that is created in the lowest time frame that you use for your entries. So initially the market was moving to the upside, took out the liquidity, broke structure after diving into the higher time frame point of interest. This breakout structure here signals now we should be selling. Look for potential liquidity zone whereby they will be taking out the liquidity before reversing. It is this one. This is the strong high, this is the weak low. The first take profit objective should be this weak low, right? And I talked about the strong high, the weak low phenomenon that will aid you at least whenever you're trying to gauge or to enter. Let me write strong high. Is the strong high. Then what is formed as a result of the strong high is the weak low, this one. So ladies and gentlemen, try to backtest, right? You are trying, or you are getting different pairs, then try to figure it out how they usually happen. Now for the buys, I'll just invert the scale. Now this one will be the higher time frame demand now, right? Should be the higher time frame demand. Oh, sorry, this one. Demand. The opposite of supply is demand. So this one will be the lower time frame demand. This is the BMS at this particular section. Then we have now the strong low. Strong low. Then what is formed as a result of the strong low is the weak high. So this one will be the weak high. I've just flipped everything together so that I can talk about the different scenarios that we have. So the market was turning to the downside, took out the liquidity, broke structure here, confirming potential now, buying pressure. Wait for this liquidity to be taken out. Whenever it dives into this demand level, you want to be a buyer. First take profit objective will be this weak high. But at least this pattern should unfold in your highest time frame point of interest. So you stock the pattern in the lower time frame, or rather your entry time frame. So ladies and gentlemen, this is the pattern. You could be stocking now the pattern so that you can be able to see how it unfolds in different pairs all together. So until then, ladies and gentlemen, I wish you good luck and good trading. So try to backtest and do more research about it. See you soon.